In the world of investing, securing a steady stream of passive income is a dream for many. Dividends, those regular payouts from companies to their shareholders, offer just that, a way to grow your wealth even as you sleep. Today, we'll be putting two popular contenders under the microscope: SCHD, the Schwab U.S. Dividend Equity ETF, and FGD, the First Trust Dow Jones Global Select Dividend Index Fund. Both SCHD and FGD have garnered significant attention from income-seeking investors, and for good reason. They offer exposure to a basket of dividend-paying companies, providing instant diversification and the potential for consistent cash flow. But their underlying strategies and areas of focus differ, leading to varying levels of risk and potential return. This essay will delve into the intricacies of each ETF, comparing their strengths and weaknesses to help you determine which one aligns best with your investment objectives. By the end of this comparative analysis, you'll be equipped with the knowledge to make an informed investment decision that aligns with your risk tolerance and financial aspirations. So, buckle up as we embark on this journey to uncover the winning dividend ETF for you. SCHD, the Schwab U.S. Dividend Equity ETF, stands as a beacon for investors seeking stability and growth. This ETF tracks the Dow Jones U.S. Dividend 100 Index. It prioritizes companies with a history of consistent dividend payments. SCHD's portfolio boasts a diverse mix of sectors. One of SCHD's most compelling features is its low expense ratio of 0.06%. This low-cost approach ensures more of your returns go directly into your pocket. SCHD's historical performance solidifies its reputation as a dividend powerhouse. While SCHD keeps its focus on the U.S. market, FGD, the First Trust Dow Jones Global Select Dividend Index Fund, takes investors on a journey across the globe in pursuit of dividend income. This ETF tracks the Dow Jones Global Select Dividend Index, which comprises high-yielding stocks from both developed and emerging markets. By venturing beyond U.S. borders, FGD offers investors the potential for greater diversification and exposure to a wider range of economic landscapes. FGD's portfolio includes companies from over 40 countries, spanning a multitude of sectors. This global reach can be particularly enticing for investors seeking to reduce their reliance on any single country or region. Emerging markets, often characterized by higher growth potential, can offer attractive dividend yields, albeit with increased risk. FGD's inclusion of these markets adds an element of growth potential to the portfolio, albeit with the caveat of potentially heightened volatility. However, FGD's global reach comes at a price. Its expense ratio, currently around 0.55%, is significantly higher than SCHD's. Additionally, FGD's exposure to foreign currencies introduces currency risk into the equation. Despite these risks, FGD has historically delivered competitive returns, albeit with greater volatility compared to SCHD. Investors seeking to maximize their current income stream and comfortable with the added risks associated with international investing may find FGD to be a compelling addition to their portfolios. With a firm grasp of SCHD and FGD's individual strengths and weaknesses, it's time to pit them against each other in a head-to-head showdown. Analyzing their key metrics side by side will provide further clarity on which ETF might be the better fit for your investment goals and risk appetite. Let's start with dividend yield, a crucial metric for income-seeking investors. As of today, FGD boasts a higher dividend yield compared to SCHD. This difference in yield stems from FGD's focus on high-yielding stocks globally, including those from emerging markets where yields tend to be higher. However, it's important to remember that higher yields often come with increased risk. Expense ratios, another critical factor to consider, paint a different picture. SCHD emerges as the clear winner in this category, with its remarkably low expense ratio significantly undercutting FGD's. When analyzing performance, both ETFs have historically delivered respectable returns, albeit with different risk profiles. SCHD, with its focus on quality U.S. companies, has exhibited lower volatility and a more consistent upward trajectory. FGD, while offering higher potential returns, has also experienced greater fluctuations due to its global exposure and inclusion of emerging markets. The choice between SCHD and FGD ultimately boils down to your individual investment goals and risk tolerance. In the battle of SCHD versus FGD, there's no clear-cut winner. Both ETFs offer unique advantages and cater to different investor profiles. The key to making the right choice lies in aligning your investment goals, risk tolerance, and overall financial situation with the characteristics of each ETF. For investors seeking a low-cost, set-it-and-forget-it approach to dividend investing, SCHD presents a compelling option. Its focus on quality U.S. companies, low expense ratio, and history of consistent dividend growth make it an ideal choice for conservative investors or those seeking to build a foundation of passive income within their portfolios. On the other hand, investors comfortable with higher volatility and seeking potentially higher yields may find FGD more appealing. Its global diversification and exposure to emerging markets offer the potential for greater growth, but not without the added risk. FGD is better suited for investors with a longer time horizon and a higher risk appetite. It's also important to consider your overall portfolio allocation when deciding between SCHD and FGD. If your portfolio is heavily concentrated in U.S. equities, adding FGD can provide valuable diversification. Conversely, if you seek exposure to international markets but prefer a more conservative approach, SCHD can offer a balance between U.S. and global exposure. Carefully assess your individual circumstances, investment goals, and risk tolerance to determine which ETF aligns best with your financial aspirations. While SCHD and FGD are excellent options, they are not the only players in the game. The world of dividend investing offers many ETFs, mutual funds, and individual stocks to diversify your portfolio. Consider VYM, the Vanguard High Dividend Yield ETF, and DVY, the iShares Select Dividend ETF. These ETFs offer different sector allocations and strategies. Investing directly in dividend-paying stocks is another option. Remember, individual stocks carry higher risk compared to diversified ETFs. Allocate a portion to SCHD or FGD for broad market exposure. Diversification across asset classes, sectors, and geographies can enhance long-term financial success. After an in-depth analysis of SCHD and FGD, it's clear that both ETFs offer compelling advantages for dividend-focused investors. However, the question of which one reigns supreme remains a matter of individual preference and alignment with specific investment goals. SCHD, with its focus on quality U.S. companies, low expense ratio, and history of consistent dividend growth, emerges as an excellent choice for conservative investors seeking stability and steady income growth. Its low costs and impressive track record make it a solid foundation for any dividend portfolio. FGD, on the other hand, appeals to investors comfortable with higher volatility and seeking potentially higher yields. Its global diversification and exposure to emerging markets offer the potential for greater growth, but not without the added risk. Ultimately, the best way to determine which ETF aligns best with your needs is to carefully consider your individual circumstances, investment goals, and risk tolerance. Both SCHD and FGD offer unique advantages that can enhance a well-diversified portfolio. As we conclude our exploration of SCHD and FGD, it's crucial to emphasize that this analysis is not intended as financial advice. Investing in the stock market always carries inherent risks, and it's paramount to conduct thorough research and consult with a qualified financial advisor before making any investment decisions. While SCHD and FGD offer promising opportunities for dividend income, past performance is not indicative of future results. The value of your investments can fluctuate, and you may experience losses. Remember that your financial journey is unique, and what works for one investor may not work for another. By taking a proactive and informed approach to investing, you can increase your chances of achieving long-term financial success. In the quest for financial freedom, dividends stand as a powerful tool, offering the potential for passive income and long-term wealth accumulation. SCHD and FGD, with their distinct approaches to dividend investing, provide investors with compelling options to harness this power. Whether you choose to embrace the stability and growth potential of SCHD's US-focused strategy or venture into the world of global dividends with FGD, remember that diversification and careful planning are key. By aligning your investment choices with your financial goals and risk tolerance, you can position yourself to reap the rewards of dividend investing for years to come. As you embark on your investment journey, Embrace the power of dividends and watch your wealth grow steadily over time. With patience, discipline, and a sound investment strategy, you can achieve your financial aspirations and secure a brighter financial future for yourself and your loved ones.